It's 12:45 a.m. on the 9th of February 2012. We're just going to do a short review of LinkedIn because of the gap up it made today, and we're going to examine a key level in the respect of RSI divergence on the classic level. A classic level just means past resistance, like it's broken, and then access support in the opposite direction. The classic trade is to get long off of that new level that behaves in the opposite manner from prior. So, very quickly, we'll show you the daily charts. LinkedIn. Okay, so I don't know if my screen capture is catching it, but on the far left, if I can just move it around, so I drag it into the, there you go. Here is the IPO, the high was 122.65. And then if we scroll ahead to the present, you can see how that level has been crossed. So here's that level, you can see it was nice resistance in September, and we had a bearish divergence on it. RSI dropped from 85.8 down to 75.3. So it dropped, like 10% across 1, 2, 3, 4, 5, 6. It dropped 10% across 6 days. So that's like a golden ratio PD value. It's like 10 divided by 6. What? It's like 1.6. And then you can see we come off, and we reversed down here on 9th of November. In the daily chart, there is no RSI divergence, but no doubt in the 1 hour chart, there might have been a strong divergence there. And you can see that falls on, I guess, the year low. Well, not even close to it. It's out by 91.47, and the low on the 9th of March was 91, $3 out. So anyway, we need to look here in the 1 hour chart and the 5 minute chart to see the price behavior, to make a point about finding a signal for a price reversal where it is probable. So here's the 30-minute chart, and just after this last candle is the last half an hour of the cash market on the 7th of February. So you can see the resistance from the IPO is broken. There's a little bit of indecision around it. That's a real point of price instability. We get above it, and then we make a big divergence just half an hour before cash close on the 28th of January. RSI's drop. It set a classic bearish divergence from 86.7 down to 72, so it's minus 14%. And you can see we come off. So that is what I call a naked classic bearish divergence. And we'll look right here in the 5 minute chart on the 28th, just before cash close. I will bet you that there was a bearish divergence in the 5 minute chart. Anyway, so here's the 2 points of interest, the 31st and the 4th. So we're going to look first at the 31st of January. There's no RSI divergence in the 1 hour chart, but what happened there in the 5 minute chart? So we're expecting a bullish divergence, and we know the level held, so we don't really have a good, well, if I show you the chart scroll back, pretend you didn't see it, we'll try to eliminate hindsight bias. The 31st of January, it's a bearish open. We sell off, a buck or two. Sell was hitting the bid for whatever reason. And then on this chart, it's a perfect double bottom over the space of an hour. RSI climbs from 13.7 to 26.5. So it's up like 13.2%, say. And then what happened for the volume? So let's just go to Google Finance and look at the volume. I got it queued up. So right there, there's thousands of shares traded here. It is a perfect double bottom right there. So a little bit of consolidation. There's literally 8, 9,000, 5,000, 10,000 over the space of an hour. So there's accumulation there. The poor guys that sold it in here, yeah. They obviously didn't hear of the classic trade. They should take some tuition from London's Amplified Trading on what the classic trade is. So we go ahead. So now we want to look at the next time it's tested, which is the 4th of February. Okay, so we're back down on it. So there's cash open, another bearish cash open. It must be programmed sell orders just stripping out the ladder, and then you're going to see a nice bullish, look, here we go. It's a perfect double bottom, bang on the classic level. So 25.4 and then 34.3, say. So it's like, it's like 10%, and it's across like 8 candles. So the PD value there is greater than 1, so there's a statistical edge that we're going to hold at level. Let's look at the volume right there on the 4th of February, LinkedIn, 5-minute chart, Google Finance. So if I just left click and can it, at least there's only like 12 by 6, like 80 odd candles we have to look at. So here we go. Oh, look at this. This is the 4th of February. Look at that candle right there. That's the completion point of the double bottom divergence. Look at the volume. It's like 47,000. That's the biggest volume, and then this volume here, right there. So there's not a lot of volume, but you can see the volume on the cash open. It's 50,000 in a 5-minute interval. There's a lot of people snapping it up, I guess. So the volume doesn't even tell us much there. The RSI divergence and the contrast of the RSI delta percentage to the delta time is what's really nice. So then we want to look at the hourly chart again. There's one other point of price instability that I was interested in, and that was 30 minutes right here on the 7th, okay? There's no signal in the 30-minute chart, but let's look on the 7th. And very quickly, I got the chart queued up. No, that's a daily chart, sorry. See, the longer time, that's daily, hourly, 5-minute chart. Okay, so we're going to the 7th. We're jumping ahead. We don't went too far. We saw the gap. Oh, here we go, look. Here is, this is beautiful. So, here is the 7th. We sell off, everyone just piling out of it. And if you sold it right here, and then you saw this double bottom, look, RSI there is 8. 1, 2, 3, 4 candles later, RSI there is 28. So basically, RSI is up 20% in 4 bars. So 20 divided by 4, that's a 5.0 price deceleration value by my quantification of momentum change in financial markets in terms of applying classical physics acceleration equation to RSI, which is just a change of the y-axis to the change of the x-axis to say there's a statistical edge. When I deleted my level, so we're basically on the level, and then we bounce. So if you were a seller there, you're a fool to be getting out of a position on a classic level that held twice with a strong double bottom divergence. You're an absolute fool. But of course I have the benefit of hindsight bias looking at the charts. But you got to bear in mind that I'm explaining to you how you quantify RSI divergence to filter out false signals. Here's the 1-minute chart for today. Here's the gap up. And there's not much going on. It's just pretty much sideways and just consolidation. There's not going to be much momentum change. There'll be some nice reverse divergence signals, but I can't bother to look for them. Because the point of my video was to look at momentum change on the classic level where resistance became support before the gap up. Yeah. So really nice look at momentum change on a key level in LinkedIn. Okay, so that's it in the video.